Again, I think you'll really like our webinar today, but like I said, go to our Day Traders Action site and make this a part of your regular daily routine to go over to this section. I've got it designed so you can shrink it down and tuck it up in the corner of your screen while you're trading. Excuse me. This will keep you very in tune with what you're trying to accomplish. I have a nice video here on trading affirmations showing some of an earlier video I made some years ago. It's really nice. It's a helicopter soaring through the jungles of Kauai, Hawaii, all the beautiful waterfalls and everything, and dramatic music. Really inspiring when you're starting your trading day. But you can also start reading. Here's my top 10 favorite affirmations. What you do with affirmations, you actually work with them. You don't just read them and go, uh huh, uh huh. You actually read them with power and conviction, and they will instill a certain type of change in your neurological way of thinking and interpreting things. So once you study the top 10 and you use those, um, type affirmations, you'll get a lot of confidence in what you're doing. Like for the example, this one, trading is a game. Trading is a mental game. I have to love my losers as much as I love my winners to destroy fear about trading. Just in that affirmation alone is a whole tremendous amount of work on yourself that can be done because we all have fear of losers. What ends up happening is we don't face that trading as a mental game. We start hating our losers. We start fearing our losers. We become real edgy about them. We get out of winning trades too early, or we cut trades too quickly that could have ended up being successful for us because of fear of losing. So you have to have a proven system, of course, but once you get a proven system, that doesn't end the game. The game still goes on, and it is a mental game where you have to learn to love your losers. You see, that's like contrary thinking to most people. You have to love them because they're part of the steps to winning. If you have a proven system that has 80-90% winners like Boomerang Day Trader does, that means out of every 10 trades, you're going to get 1 to 2 losers. So you have to love those losers because it's a stepping stone to the winners. So as you go down here, not only have I prepared this top 10 in the video for you of trading affirmations, really get off the right start, but I have literally created a book of my favorite affirmations going back 26 years. So I give you a tremendous amount of material here to work with. Find your favorites, cut and paste them, copy paste them onto one sheet if you want. Find your favorite ones and put them on. Make your own trading affirmation page, but you can use mine to springboard off that. Look at that. Look at how many I've built for you here. These are tremendous, tremendous. I focus on the correct winning and proven trade setups, not the money. That's another big thing. So the two affirmations I just gave you there are practically the lifeblood of the whole trading business. Correct trading, correct winning, being focused on that, following a proven system, not focusing on the money, and realizing that your fears are because you're afraid of your losses rather than embracing them and loving your losses. You see what I mean? How many of you knew that? How many of you are doing what I just mentioned about fearing your losses and pulling the trigger too early, making mistakes in trading? It's all based on that one thing. Those two affirmations just set you on the right path. Put them on your desk. Say them every day. I focus on the correct winning and proven trade setups, not the money. And the one I gave you before, that alone will do it. But what to speak if you dive in and really just luxuriate your mind in these wonderful trading affirmations that will give you tremendous, tremendous faith in what you're doing and belief in Boomerang and your system that you're using with Boomerang. I'm going to show you some more things today, but I just wanted to point that out. It's very important to watch this. So I'm going to be talking, not too long today, just about, this will be about a half an hour video, and then we'll go into any questions you have. But it's going to be very specific to trade channels and tracking the trade channels to get in the Boomerang. Because if you think about it, in my work, I look at many different things in the markets, stocks and different things, and analyzing the market and the underlying bias and all that. But really, as Boomerang traders, when I get down to the nitty gritty of trading, all I care about is, do I have the right setup? Is the trade channel working? How are the prices acting? And are we getting in the right setup? And is that setup working? You see what I'm saying? So I'm going to show you some things today on how to set up the trade channels and some ways. Now, this is not required in any way to own Boomerang and trade with Boomerang, but it's more or less just like an advanced study or way of making the extra effort to make sure you get in the right trades. It's a way of curing trader laziness, which a lot of us get, and it's one of the worst things that can happen because the market isn't lazy. The market is hyper, especially the last 2 days. You've probably seen it. It is hyper. In fact, one of my rules is that if the market's in fast market and moving too fast and hyper, this is going to really shock you, this rule. If the market's moving too fast and too hyper, stand aside. You don't have to trade the markets. If they're too fast and too crazy, don't get in there and trade. Just wait. Let them calm down. And if they never calm down, then you got a day off. Who cares? It's better to do that. So, with that in mind, let me start here with crude oil, because on crude oil I also want to show you a couple other things. So I'm going to squish this chart over the NASDAQ chart there. So all we're focused on here is this crude oil chart. Now this is the current April crude oil chart, April 2017. And what I want to show you is, as you know, well, crude oil, this is a West Coast chart, so we're usually looking for setups after 5:45, which is right in this area. Quarter to 6 a.m., that's when crude oil starts kicking in. Now, I'm not even sure what day this is. I could find out, but it doesn't really matter because all we're doing is looking at the chart patterns here and trying to get it right. Now, let me just briefly, well, I'll leave that arrow there. I might be able to take advantage of that in a minute here. But look at this. First of all, what you want to do is when you're looking for a new buy channel to form, obviously you know the rules of Boomerang, and for those of you just learning about Boomerang, you'll just have to bear with us. You'll pick up the method from what I'm saying here in the context, but we're talking here on this webinar to a very large group of existing Boomerang owners, so I'm just going to assume everybody knows or should know exact method, and that is you get a buy channel. I'm going to base this on this buy and crude oil here. You get a buy channel opening up. This arrow will make a sound, and you can choose any different sounds that you want. And when that candle closes, which you'll be able to read by looking over here at the tick counter here, when that goes down to 0, a new candle will form on the chart. It's a 450 tick chart, which is what we use standard for Boomerang trading crude oil. So the trade channel opens. That's the first thing you look for, and you wait for the candle to close by watching the tick meter. Next thing you do is you say, well, now that that's closed, are these dynamic trend bands? These are two bands here called the dynamic trend bands. This dashed dotted line 1 is number 1, dynamic trend band number 1, and number 2 is this thicker, slower band here that's not dashed and dotted, but it's just a straight line there. We see, are they matching color or crossing over? That's the first rule. And if they are, then you trade a pullback to the sig line, and this is a mechanical scalping system. This is not, we're not trying to trade them here and get out of them up here. There are methods for doing that, very high risk, especially on crude oil, but that's not what we're trying to accomplish. We're just looking to grab a $100 bill. Crude oil trades at $10 a tick, and if you get 10 ticks, that's $100. It's a $100 bill in your pocket. What I often joke when I'm trading live in my room with the traders, I say we're picking up $100 bills in front of a steamroller. And if you seen a steamroller on the street there, picture yourself running out quickly and jumping in front of it when you see a $100 bill about 3 feet from where the roller's coming in. Run out and grab it and jump to the other side, and you got yourself a $100 bill. Hopefully you don't trip and slip there, or hopefully the cement's not too wet that you get trapped there. I'm joking, of course, but sometimes it feels like that. It's a high-risk business, and that's what we always like everybody to know. Well, today I'm going to show you some extra methods for verifying that the channel is good to go. The first thing we want to do before we talk about verifying a channel is what to watch for in terms of caution on a channel, and that is if you got really heavy whipsaw spike candles coming in, a series of them. Now here's what one looks like here, and here's one here. This one pretty much too. Let me go back a little and see if I can find a real whipsaw frenzy here. I don't see any offhand, which is kind of cool. That's good. But a lot of times, these markets get into this heavy whipsaw stuff, And you just want to avoid, if you see 2 or 3 or 4 candles side by side like this, just the first thing that should go up is a caution flag in your mind that, uh-oh, there's a lot of drama here, especially if you're getting a whipsaw one up and a counter whipsaw one down, especially if it changes color on the boomerang charts, which will paint the chart or the candle color. If you get a green one and then you get a counter red one, just stand aside. That market's nuts. You don't want to trade it. You want to wait and see, let everything form. So that's the simple method. Believe me, that's all there is to it. You have this thinner signal line running up through here, and you have the Cobra running here, which is a little bit of a faster line, which gives us verification. This orange line here is an additional thing that you can get from me. It's called a filter, and it's part of my roadmap, which is a more comprehensive study of the markets. Not just Boomerang. It's designed for Boomerang, but it's a more comprehensive study of the entire markets and how to read key exhaustion levels where institutions are looking to buy or sell the market or get out of positions that are profitable. And it's got 5 different new indicators that I've added into it. I'm just trying to let you know this is one of them. It's a filter that I've applied to this crude oil chart. So what I do with this filter, by the way, is watch for the Cobra to cross over the filter as an additional tool to let me know that that's a good solid channel. But here's the new stuff I want to show you today. So watch out for whipsaw candles first of all. First thing to do, and this is one of the real winning ways to make sure you're in a winning trade. It doesn't guarantee you'll be in a winner, but boy, does it add a lot to the trade, and I'll show you that in a second. And that is, make sure after the channel opens that you get 2 taps on the Bollinger Band. These are standard 14-period, 2-period standard deviation Bollinger Bands surrounding the Boomerang channel here. And what you want to do is make sure you get at least 1, 2, there's actually 3 taps here on the Bollinger Band, but at least 2. Then, if you got the matching dynamic trend bands, you trade a pullback the signal line, your odds go way up of that being a winning trade. Now, did you catch that? That's got to be the simplest thing in the world, but I'm telling you, you'll get thrown off if that condition is not there. Sometimes if you don't see that condition and you ignore a trade, you may still have a trade that'll turn into a winner. That's the power of Boomerang. But most of the time, you're better off just waiting to get trades that really, really confirm out in a great way. So that's the first thing. Let me give you a couple examples. So here, 2 taps in the signal line, pullback 64, runs up to 74 for 10 ticks. Well, I'll get into this type of thing later. First of all, you don't have any crossover or matching color, so there's no sell signal here of any kind, but I'll get into that in a minute. But look at this. The second rule I want to let you know is that second level trades, if you're going to ignore the 2 taps on the Bollinger Band rule, at least just consider doing that only on the second level trades, because the second level trades are in a world of their own. Because this is a second level trade here, classic. First level up, you take 10 ticks, a counter move with an arrow that prints a sell channel and moves lower, and you'll usually see a yellow dot in the case of an opposite channel on the upside, and it doesn't disrupt the color of the dynamic trend band number 2 or the upside flow. This one pulled back a little. No trade here, nothing to do. It's flat as a pancake, as you can see along the channel, along the back and everything. But here's the key. When it goes back up again, that's a second level trade, and those are extremely reliable. Now, although this tapped the Bollinger Band 1, 2, 3, 4 times and pulled back, still, if it hadn't, those second level trades are very reliable. So there's 87 jumping up to 04 for another 10 ticks on just this one intraday trend move here. Now notice here, the market then formed a sell channel, sell channel got formed. The arrow closed. You had a crossover right here, and you even had 2 taps on the Bollinger Band. But what's wrong with this trade? I'm going to show you right now. Here's what's wrong with it. let me get rid of this arrow for a minute. I had this up here earlier. All you're doing is, if you're using Ninja or any other charting platform, just go up and select an arrow here. And that's Control 12. So I'll remember that. Where's my... Yeah, I'll remember that when I need to print. It's kind of easy just punching that button. Look at what I like to do is look at the last two or three tops of the candles. Now notice these topping candles are the candles, but what I'm saying is the top. Notice how they're sloping up. You see what I mean? Now, here's the big secret. Not only the taps of the Bollinger Bands, because the Bollinger Band, by the way, I forgot to mention, the reason we like that is usually, and Bollinger Bands are used by institutions, used for a long time. John Bollinger, brilliant guy who developed those. They really do work. They're not a trading method, but the tendency is that when the prices go and tap the Bollinger Band, they tend to form a directional move in that trend direction, at least for the short term. Not always, of course, like here, but and here too, but the tendency is for that to occur. So it's a good confirmation thing. So what I was going to show you is that using this, if you go to the bottom, see, you're talking about uptrend and downtrend. If you go to the last three candles here, for example, here's where I get to use there it is. No, that didn't work. Let me try that again. Oh well, that's okay. I'll just pick it off up here. If you look at these last two or three bottoms of these candles here, say you take this one's okay, but if you use this one, it won't quite match. But if you use these two, for example, and this one, watch this. Notice what I'm doing there using the bottom of the candles. Now, if you've ever done charting on charts, you'll be very familiar with this. But that's like a common trend chart pattern. 1, 2, 3. Now notice this. If you're over on the far right side of the chart here, and you got a brand new boomerang channel forming, and naturally you're nervous because you want to get in it if it's going to be right, but you want to make sure. So the first thing you can do is you're waiting for the arrow to close, right? We already know that. And then you determine what do the dynamic trend bands say. Well, first of all, they're not crossing and they're not matching colors, so you don't have to worry. And as you progress the chart forward, tick by tick, you get more information. Now, if you went in there and took the information off these last two candles off the bottoms there, and you use this as an additional pivot, and you ran a line straight up there, that's going to show you an upward sloping chart, channel. That's so vital, believe it or not. That is probably the most vital thing, and it seems like such common sense, right? Do I have an upward sloping channel in the case of a buy? So that's what you can do, is take the bottom last two or three candles and run a trend line up there, and then you can match that up with the rest of the channel and determine if that's something you want to do to take a long trade. So here you got these running here, and now they're matching color. So you say, yep, they're sloping up. The Cobra's sloping up. I've had two taps on the Bollinger Band. I'm going to go ahead and trade this pullback right here at 48.64. You see that? Doesn't mean it'll be a winner, but you've added more, and I've got more information for you too, but that has really given you a lot of additional confidence that the channel is indeed sloping up. Now you see the dynamic trend band number 1 is sloping up. 2 obviously is going to be flat for a while. But if you look at the Cobra and the DTB number 2, this is another thing. Take a look at those and make sure they're sloping up at some level. Now, I'll give you an example. If I put the cursor up on this line right here, that is clearly a flat line, right? If I put the cursor up here on the Cobra or the Boomerang or the dynamic trend band number 1, That's a flat DTB. If I put it here, you can see what I often joke and call a piece of the pizza that's here. And that shows up when you look at it in relation to this orange filter line. And we use the Cobra crossing under that. That helps. That the reason that's very valuable, it helps make sure you have a sloping channel. And then of course if you go and take, in this case here, the last, okay, so here's the channel opening, right? And you take the last two candles, or even like this one, and you run a trend line down there. All that's showing, or even if you move it up here to match this one here, the main idea, it's helping you. And I know you can see it anyway, but when we're trading and the markets are moving fast, our mind will make stuff up. It'll not see things. It'll make things up, or it'll miss seeing things that are right in front of us. This is literally an exercise to help you be sure to focus on the goal at hand, which is to see that trade channel moving lower. Now I know that the dynamic trend bands hadn't crossed, weren't matching, but I'm just giving an example of how to take the last couple candles and run those. In this case here, you can also compare the DTB number one with the Cobra. You see what I mean? And you can glance at that and say, well, they both crossed under the flattening filter here, but look at how that creates a slope, and then you got your arrow here, and this you can do in advance of the actual crossover. Now I know this trade didn't work out here, but this one certainly did. And the idea is that when you were right here and you drew those and you saw the Cobra and the dynamic trend band number one channel pointing up, and then the change in dynamic trend band number two, you get a lot more confidence getting long in that trade. You see that? So this is a great tool. And again, on the second level trades, maybe there's a little more leniency because the trend is already established, so they have a little more room there. Now let's just, although this is on Globex, just because it's convenient, we have a chart pattern right here. I'll do the same thing and show you that. It's very quick. You just get your arrow line up here, and Control F2 is what that is. Okay, I get it now. I get it. So what are we doing? Here's the market flattening out, right? Obviously the bottoms here are flat, right? But if you take the last one here, here, and then maybe you take the last one of the boomerang channel and the last low here, the idea is you're looking at these lows and you're trying to get an idea based on those last dips while you're on the right side of the chart. You see that? Is this channel pointing up or down? Is the market turning back up, and is the channel moving up? So you look at a DTB number one, you're looking at Cobra, which is flat here. You've drawn these lines, which you can do right before there's even a confirmation. And by the time that you get the crossover, your arrows is going to extend out. If you're using a chart way on, I often will trade with my chart here, and this is all blank. You see what I mean? I don't trade right on the hard right edge, but I'll move it off here, and this will all be blank, so I can see the arrow pointing out further. If not, and you want to use it like that, then simply select a line or a ray, and that'll extend out. When you punch the line in, it'll go out to infinity, but those kind of mess up the chart in my view. They kind of got, because it takes up the whole chart forever until you erase it. Anyway, so that gives you an idea. So now, same thing. You're coming into a new trade here on crude oil. We already did this one, and you can see how well that works. You're just making sure your brain is totally getting and focusing on that. You want that channel sloping in that direction. Without these slopes, the trades aren't going to work, plain and simple. Some might, but they're not. Now let's work on one that didn't work. Obviously this one, another thing you're looking at too is the Um, Control 2, there it is, got it. You're also looking at the rim of the trade channel, the lower rim, which you can see it sloping, but the arrows, if you can draw, you get real good at drawing those real quick and you go, that is an upsloping channel, indisputably, you see? And you can draw that right here and you can see because you can, what you can do, and I'm not trying to say that you have to get your chart all cluttered up, but it's going to help you. Who cares? Once the trade's over, boom, you made $100. You erase the arrows if you want. And that's very easy. You just go up here and click, remove drawing objects, remove, well, select all or arrows. You see, it just takes 10 seconds to cancel them. But look at this too. If you take, okay, here's the opening channel, here's the first tops here, here's the trade channel. You can go in here and you know what flat looks like, right? Here's flat. So you know what flat looks like. So now if you have, you can start out even by when the arrow appears, you could draw a flat line across the top of the channels or right in the middle of the candles. So you can distinguish, here's flat, and that's clearly sloping up. So when you get up to this level here, your brain is crystal clear focused that I've got an upsloping channel. It's tapped the Bollinger Band twice, and I'm in the right configuration. That's all you can do. If it bombs, and I'm going to give you some hints on how to determine that, and the trade bombs, but if you've done your homework right, it probably won't. The odds are very high, 80, 90%. But if it does, at least you know you did everything right. You did everything possible to make sure you're in that right slope, and the market just went nuts and whipsawed you out or just reversed for whatever reason. See what I mean? So that's very excellent information that I just gave you there on how to do that. So 2 taps in the Bollinger Band. Well, first of all, extreme caution on series of spikes that either ramp the market. If you had 3 of these ramping the market up, or 3 back to back, or 2 up and 1 down, and they're just whips on. Don't even worry about the trade. Just wait because it's going to only cause you grief. It's not going to make you happy. It's going to mess you up because you'll probably have a losing trade if you get desperate and you think I got to trade. You don't have to trade. Just wait, 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 and you'll be much happier. And again, I'll go over your questions a little bit later. I'm just going to talk another 15 minutes and go over this. I want to keep this real concise and crisp so that we can put on the blog and other traders can refer to it and you can look back over it as well. So now, let me show you a classic example of how you can see Control 2. Oh, well, here's the rim of the trade channel here. Look at the last 3 candles are all straight across. Even if you said, okay, the last 3 here, and you drew these going down, right? But you drew the look at the rim of the trade channel. You see? The whole thing is just not really sloping in the direction, and especially by the time you're analyzing this, watching for further confirmation, you got 2 taps in the Bollinger Band, you haven't had a change of color, and indeed the dynamic trend number 2 is actually still sloping upward until you get to the crossover, because you're not going to do anything to get the crossover. By the time that happens, the market's leaped up. You got a new buy channel opening, which one of those rare but sometimes unusual, where the channel opens and the boomerang algorithms are split seconds. So it opens a new channel and it's tapping the sig line, so you get them both popping at the same time. You're not going to get those, so don't worry about those. You got to wait for the trade channel to close anyway. But so you see that is a failure setup, destined to fail. And then when immediately they come back, you never would have got a signal anyway because the new channel opened up and popped it up. And now you've got matching dynamic trend bands right here after two taps on the Bollinger Band, and up they go. See, so by applying these rules, you'll be able to always get into trades that work out. Now let's take a look at this one. This is kind of similar in the sense that if you you look at the last candles up here, they're red candles and they're lower, but look, the tops of them are flat. This one's actually higher. It's actually sloping up. The trade channel is flat. Here, let me move this up a little. There we go. The trade channel, do you see these are red candles, but they're sloping up, so you can't use a descending thing. You can use these to show what a descending chart looks like, but the trade channel is flat here. So, and you don't have a signal until you get right to this candle or this one. But if you say you're on this candle right here on the far right side of the chart, look at the trade channel, as flat as a pancake. You want that top of the or bottom of the trade channel, depending on whether you're in an upslope, you want it sloping up, because that's a slower line. That's the slower edge of the rim of the trade channel. The bottom on an upside is a slower one, and on the top it's slower. So you need to see that also sloping in the direction of the trade to keep you in a good trade. Now, I don't mean to have all these lines and arrows over here, but you can see how valuable they are. This is going to help you stay out of those frustrating trades that didn't pan out. So you can see here, there's no trade even set up on the dynamic trend bands until you get to this or this candle. You got a completely flat here, and you just barely now have the cobra crossing over the filter. This is one much higher risk trade here as far as trying to go short here. And you can see that without even going forward. Not that I'm using a still chart. You can see it going right here without going forward. That's a higher risk trade. So you skip it. And if it drops down 10 ticks, so what? Which it didn't. It went 88. This is a typical one of these kind of frustrating channels where you think you're doing the right thing. Hey, they matched color and crossed over. I got short at 88. They went down to 83, 5 ticks, and I got all worked up and said, all right, here we go. And then they shot up right in your face, and you had to get out of the trade on a candle, which brings us next topic. First of all, though, what you did was you've realized that this is not, no matter how hard you want to believe that it is, it's not a sloping down channel. Now, you could take this candle and run a slope this way, but the idea is you're actually trying to look at the channel and say, is this sloping? And if you really are looking at this, you see that it's not even on the fast side sloping. The flat, it's completely flat up here. So it's a higher risk trade. And I know once you get really good at this, you can draw these very quickly. And what it's doing, though, is giving you that visual, and it's getting your brain focused on this channel is really not sloping down. I'm selling, I want the channel slope down. I'm buying, I want the channel slope up. You can always wait and see what happens. In other words, you can always get in a trade, a couple of a pullback signal line later if you think it's going to work out, but instead they shot up in our face here, and what do we got? Nothing. We saved ourselves getting stopped out. Now, this being sort of a quasi sort of second level channel, these can be a little frustrating, and I know because I trade them every day. Because we don't like to buy them or sell them, but buy them in this case when they go spiking higher real quickly. Then you apply a pullback signal line on a fat channel, what we call a fat channel. Most of you are familiar with that term. But in crude oil, being the wild beast that it is, sometimes even in spite of a fat channel, 18 will run up to 28 exactly there. Look at that. Ran up to 28 exactly, pulled back, and then even continued higher. That's up to you, you know. These spike candles are going to create an upsloping, at least top of the channel, and the bottom too. Everything's, including the channel, which another thing you watch for using this filter is just watch for everything, the channel, the cobra, the dynamic trend bands to cross, and watch this filter line scoop everything on the bottom in the case of an up channel. And again, this it's kind of a discretionary thing. Trade at the top of the fat channel or just skip the trade. You know, that's really up to you to decide. These are my lines I'd keep handy for drawing. So now over here, I don't want to look too much. Well, I've already looked at it in hindsight. Obviously, it's a big crunch to the downside. But how could we have seen this coming? We're in this trade. Market blasts the upside, and sometimes we'll think, well, how am I going to know that they're going to reverse? Because boy, this market's really cranking. This was looks like it was about 10 days ago, according to the chart here. So you're right here, and you say, how do I know? So the first thing, your channel opens, and you're all ready for action. You're seeing the dynamic trend bands coming together here, squishing together, and you want to ask yourself, obviously, again, what is the status? Okay, the cobra's crossed, and you can see that there's a slight downward slope. And you go in, again, you go into these last couple of candles here, and you're trying to determine, based on the, in this case of going to the downside, you're going to run the tops of them, and the bottom in the case of the upside going up. A trend line is usually drawn on the bottom in that case. So yeah, we got a slope here. They're crossing over. I'll go tick by tick here. You go, okay, now they've crossed over under. But at least you can look here and see visually, even though it's a mild slope, it is sloping downward. And you can always go in and put a flat line in. Hold on a second here. It's not working. Oh. Just so you can, you're telling your brain what flat looks like. And I know we all think, oh, I can just look at it and tell. Well, I know, but I've been trading for 26 years, and sometimes the brain will imagine things, and it's not a problem. It's just the way it goes sometimes. Let's see here. Not sure what that one is. What is with all these lines? Hold on a quick second here. These are some kind of support resistance lines I draw, which I often tend to do. So you see what I mean by putting that in just right when the channel opens, just draw a line across the top of the arrow or on the bottom, whatever, or the last high of the two candles. Just so the idea is you say that's flat, and then if you draw on the descending from the top of this candle to this one to this one, you go clearly from the flat to the slope, there's a triangle. This is definitely sloping down, although not as much as you want. And if you draw these, you'll have time to draw them, but you got to move quickly, obviously. And then you cross it and you say, okay, I'm going short here with confidence. Everything's crossed under. There's enough of a slope. There's one tap in the Bollinger Band here. Now, notice, though, if I go over here, there's actually like two, because as the chart expands, it'll back off a little, but it did live in the market go down and tap the Bollinger Band. So you kind of just say, well, okay, I'm going to go short. And you go short at that 20 area, and you get the result. And no one knows that they're going to do that. I mean, we all would like to think so. We might have some fancy charting pattern that says this was, which, you know, I could show you how to read that this is radical divergence here. it's a different subject, different seminar, but level 1, 2, 3. This is a big move up here, and you can see the divergence coming in on the power punch and the upside here. Even though they're substantially higher, it's hardly any more force in the market coming in here. Anyway, another subject and a couple other tools you'd use, but you would see that there is a possibility that a stronger downside move could occur, and you might have some other input that would help you. But that gives you the idea of how to get in these trade channels, adding a couple of ideas and tools that are going to help you. And just remember, the second level trades tend to be, this is a classic example of a second level trade. Now, obviously, the pattern got interrupted here a little with the crossover and the matching colors, but still, it's another attempt to blast higher, and they just tend to work out because the trend is established. So here we already drew this one. I could go over hundreds of examples, but it just gives you an idea that it's a tool. It's a way of saying, have they tapped the Bollinger Band? Now, what I'd like to do now is just show you what I mean by this Bollinger Band tap. And you can do this on your own, and it's going to help you. All we're going to do now, and then we'll end the seminar here, because that's all I really wanted to show you today, and just keep it very crisp and concise. All I'm going to show you right now is the effects of taps on the Bollinger Bands and how well that can tend to work. Now again, here as they're crossing, they haven't quite tapped yet. Here, and then there's a pullback, the sig line here. All the sig line have been used up. The idea here is you might have missed this one if you waited for the taps in the Bollinger Band, but I'm just trying to show you how that worked here, how that worked here. Here, the measurements that you took showed you that it could fail. But let's go forward and look at some here. Here's a second level trade that failed. Double tap in the Bollinger Band. 13 ran up to 21. It missed, got 8 ticks. I usually say 8 to 10 ticks on the trades or scalps. This one you would have been a little on more caution because of the big spike move up here. What about this one? You had the right configuration. You had the sloping down arrow. You have the slope of everything. And you have 2 taps in the Bollinger Band. So you go short here. Now, of course, the big spike formed a fat channel. But even if you went short here, 49.04, you were still spared. Your 13 tick stop held you in with the crossover. So you see what I mean? And then 04 came down to 95 for, again, 8 to 9 ticks there. So, again, it's more or less a mechanical scalping method. And you got whipsawed here, but you would have looked and saw, wow, that's a pretty fat channel there. You can see it here. Said, well, I'm going to just trade the pullback to the Cobra. The Cobra is an alternative entry level when you have a trade that is, in the case of a fat channel, or the modification rule, which is when all the pullbacks, the sig line, are used up before you get a crossover or matching dynamic trend bands. Let's go over some more here. Tap, tap, pull back, down. There's no setup here because of the dynamic trend band. We're only referring to when the dynamic trend band setup is there. Buy channel, tap, tap, pull back, up. Now this is after hours, I know, but I'm just showing you the chart patterns because they work around the clock. Dynamic trend band setup, tap, tap, pull back sig line, down they come. You see that? Here's a second level. Now this is a classic example of what I'm talking about. Here's a second level trade, right? Counter buy trade that fails. Second level trade, there's no tap in the Bollinger Band until here, which still ended up giving you the confirmation here, but you can get in those without as many confirmations because that trend is already established, especially with crude oil and NASDAQ too. Other contracts it works, but I'm just saying the second level ones you can be a little lighter on, maybe drawing some of those lines. Now that they're getting hammered all the way down here, you're watching here for a new up move, and you're watching for the dynamic trend bends match. They crossed over here, but there was still some washout downside move here coming in. So now you're going, well, should I be buying this? Well, this is again where you come in and you say, what are the last three candles look like here? See, and you can draw this. Like I said, I trade usually where I have this black chart and all I'm seeing is this, and I got all this is blank. And that's why I can draw this and tell myself, you can see it even if you're only trading less, but the more space you have by pulling it out is better. And you say, yeah, you can clearly see these are a little bit flattish, and that's why the pullback, but the trend is up. The problem here on this one is the rim of the trade channel and the Cobra are flat. See that? It's a little bit flatter here. This is leading up. The channel's leading up. But it's in terms of this trade now, if you said here, okay, everything's matching, new channel, buy the pullback signal line, 99, ran up to 09. It ran up for exactly 10 ticks. And that's, we get a lot of what I call Murphy's Law. You've heard of that Murphy's Law, where I don't know what the definition of it is. Maybe it's in the Wikipedia or something. But you know what I'm talking about. Murphy's Law. It happens a lot with trading and Boomerang as well. I get it every day in the room. We'll go hit right up one tick from my exit. Come on, just trade through it. Nope, pulls back a couple points. I got to either get out or watch the trade again. Happens all the time, Murphy's Law. And sometimes I go right at my price, trade right through it, and then let us out, and then off you go. Just depends, but that was a classic example there of Murphy's Law. Exactly 10 ticks off this entry, or 8 ticks. 49 even, ran up 8, and then flopped back. But the idea here to this flop back is because, in my view, the Cobra is flat. It's crossing under the filter, but they're both parallel. You see that? And the dynamic trend number one's kind of sloping up against this. You see what I mean? It gives you a little bit of discretion that, okay, I'm going to take this trade. It's a little higher risk, but I'm going to go for it anyway. So that's something to think about. In fact, a lot of times when you get a crossover that ends up continuing a washout on a sell, the next buy channel ends up working out really good anyway in most cases. Here it did okay. And you could have, even if you got in here and you missed getting the 8 ticks, it would have been a minor pullback and then they shot them straight up for you. So you see how these tools work. So same thing, let me show you again. 2 taps in the Bollinger Band, pull back the signal line, down they go. See that? Just get back into showing you that. Buy channel, arguably a trade set up here. There were 2. See that? There's actually 2 taps on the Bollinger Band. This would have been pretty, you may not have seen that dynamic trend band number 2 turn the blue color, but you see what happened. They just kind of shot up like a rocket ship. Same thing here. 2 taps on the Bollinger Band. Wait for it. Then it's going to add confirmation to your trade. Gee, what a coincidence. Practically every right trade does what? It goes down and taps on the Bollinger Band. Buy, sell channel, tap, tap, pull back, down they go. 2 taps. Not 1, 2. It's telling, Bollinger Bands are really good. That's why they're used so widely. It's telling you that the market's trying to trend that way. Doesn't guarantee it'll trend, but, and then again, here's a classic example of what I mean. Second level trade where a buy channel comes in, opens up a counter move, but it doesn't disrupt the color of the dynamic trend band number 1 or the slope. So when that second level trade comes in, don't worry about the Bollinger Band. Just nail that that first yellow dot there on the pullback. They hit it once, but you would have already gotten short up here. Second level trades don't matter as much because usually that trend, especially in crude oil, is already established. So here, buy channel, candle closes, tap 1, tap 2, pull back, 41, 41, shoots up at the high at 50, 9 ticks. Pulls back a little. Did it go 51? No. So you had to work this trade. You had to grab 8 to 9 ticks. I know what it's like. We do it every day in the room, and they're fast. And sometimes you just say, you just have to grab it like a rabbit. I like to call grab it like a rabbit because where I live here, we got all these. It's a woodsy area. They got these little birds and rabbits and things like. But those rabbits, they don't. They're soft little furry things, and everybody wants to eat them. These wolves and coyotes and stuff. So their only defense that God and nature put into them is their massive speed. And sometimes I'll see them out there, and I'll say, "Oh, there's a bunny in the backyard." And you go out and look at it, and you go, "Oh, don't worry, I'm not gonna. Don't be afraid." But there, you can see them practically trembling when they see you. And I'll just turn my head and look to the right. Reason I went out in the backyard, I'll look back and it's gone. It just disappeared like David Copperfield or something in Las Vegas. It just so fast. It just like disappeared. So we have to be like that as traders a lot of times, especially as scalpers. Obviously, position trading, not the same deal. This didn't set up, but you got one, two, three, four taps. That's basically the market trying to confirm a downtrend. Then when the dynamic trend bands matched, you got short here at 33 and it didn't fulfill the trade, but you were okay and it ended up going down and hitting that trade for you anyway because of the tapping tends to make the product or the contract, the prices lean in that direction. I'll give you a couple more examples and we'll move on. You can do this on your own with your boomerang charts. Look at this. This one idea alone is a gold mine. It's going to add so much confidence to your trade, and then of course, do my working with trading affirmations. It'll be another tool to help you. Those two things will really help you. So here's a crossover on the upside. We got a buy channel that closes. You got one tap in the Bollinger Band. I know this is technically is the entry. Why not wait for two taps? Take that third one, and I know this one would have been easier to grab this one at 13 and see him shoot up to 24, but you might want to wait for that second tap, grab him here at 17, take a little heat, and then watch him shoot up to 30 up here. It's an extra confirmation. Now, if you're down here, you got these bottom here is sloping down, so you're going to look before the arrow opens, you're going to take a look at these two here. You're going to say, what are these two telling me? Well, this is how they're sloping up. Now, obviously, when you're over here, and if you trade like I do with your chart with out here, but all this is blank space, then I can see that the slope up is there, and we're going to consider, well, now two, also live. Yeah, this actually did tap the Bollinger Band once, twice, pull back here, and then so you got the slope telling you that you didn't. You waited. You could waited too for the Cobra to cross over. You see, that would have been another confirmation. The Cobra hadn't crossed over right on this one. It was right on the verge of it. So second tap, and then here, you're just adding confirmation. Sure, you might get a little higher price, but with that confirmation, it's worth it. Because if you don't do the confirmation and then it turns out into a losing trade, that's kind of a bummer. Now, just another quick rule in closing here. When you're in a trade and say you didn't do all this extra homework, totally worth it, I'm telling you. And you get in a trade and oops, it's not the right deal. It just wasn't the right deal. Now this is a second level sell-off here. Classic. They're tapping the Bollinger Band once, but you don't need to worry about that. Just take the first pullback signal line. That's another classic example why the rule of the second level trades don't matter as much. You don't need as much confirmation. But the one rule is if you get in a trade that's not working out right, one way And I don't like to go, we have our rules with the 13 tick stop and that, but you can clip this top shorter, tighter, if you're in a trade and for whatever reason it starts whipsawing and you get a counter arrow. Like say you're in, just theoretically, you're in this, well, theoretically, it's only in theory, not reality. This is not a correct trade setup by any stretch. But say for whatever reason you got in this trade, you didn't run your arrows, and you thought this was the right trade. Well, instead of 13 ticks, which 16 would be down at 03, way in the heck down here. Well, anyway, I'm trying to make a point. I think you understand. You're say you got long at 16 here. This obviously is not a correct set, but you thought it was based on some other things. Maybe these crossed over, whatever, but you didn't do your homework and you saw everything still sloping down. What you can do is as soon as you see a counter arrow, that and especially a red candle or a counter colored candle than a green one, something's wrong with the pattern. Just get out. So here, say you got long at 16 and the arrow starts blinking and the candle colors here. So you get out at 11, minor exit. Just an idea. I wanted to make sure you had that idea. I use it all the time too when I'm trading the crude oil. Is if you do get a counter arrow blinking, the minute I see it blink, I go, something's wrong. It may still pan out, but I'd rather lose 3 or 4 ticks here rather than hope that it's just an aberration and that it's still going to run in the direction I want, and then it fails completely and spikes down, hits your 13 tick stop. Then you're going to get into the negative psychology of woulda, shoulda, coulda got out based on that blinking counter arrow rule. And then, of course, if the arrow fixes itself and they run in your direction, oh, woulda, coulda, should have held, and I got out with a 4 tick stop. Better off doing that than the other one, because the majority of times, from my experience, if that arrow is blinking, the counter arrow is blinking, something is interrupting the regular rock solid boomerang pattern that we want. You see what I'm saying? So with that in mind, that concludes the webinar here for today, and I think you'll find this very valuable, and I'll be glad to answer any questions that you may have.